Beijing's recent stimulus packages sending stocks surging in mainland China and in Hong Kong. For a closer look at the economic picture, we want to bring in China Beige Book CEO Leland Miller. His company is out with new third-quarter data for this week, and it's forecasting the impact of Beijing's stimulus policies. Leland, welcome. Why don't you tell us what that forecast is?
Well, I think we have to have a very different outlook for short-term asset markets and the macroeconomy. I mean, the stimulus package has basically put us headed in two different directions. On the stock market, of course, things are going well. They're going to probably go well for a while longer. It's a short-term put by the government, so they are encouraging everyone to get in. Try to redeem animal spirits and investor spirits, and it's a big cheery several months for stocks. On the macroeconomy, it's a little bit different because I think if you look at what they're talking about doing, and again, very little of this has actually come into effect yet. They're trying to put a floor on the economy. They're trying to stabilize it. They're not reaching for a higher ceiling. So whether it's property, whether it's consumption, whether it's credit, they're trying to do measures across the board that just improve things just enough so that they can basically shift their focus on things they care about a lot more.
It's interesting. We were speaking with an oil analyst yesterday who made that same point. We were asking why, since then we've seen oil prices come up, but that has more to do with commentary. We heard from President Biden yesterday when addressing the Middle East, but why we hadn't seen oil prices rise just on what China had done. And he said the same thing, that these are stimulus measures that are really targeting the stock market, not necessarily the broader economy there.
Well, that's true. But if you also look at what they're talking about doing, their talking points are about consumption. So they've said, OK, we're going to issue a couple trillion yuan of bonds. We're going to use some of that for consumption, whether it's handouts or whether it's pulling growth forward through some sort of trade-in offers. And on the other hand, we're going to feed the economy some things. We're going to backstop property. But the idea that that's going to send commodities to the moon, that's going to juice the economy in the traditional ways that China sees stimulus reacting, inside its economy. Very different type of thing they're talking about now. Very few details so far. And most of this, again, is about making sure that the doomed confidence loop, where consumers and investors and households were all seeing sinking sentiment feeding off itself. I think they're trying to stop that. And so it's not really a commodities play at this point.
Leland, how much of that is boosting investors within China and how much of that is boosting foreign investors' confidence? Because I think that's been the thing that has been shaken so much. These tensions between Beijing and Washington, commentary out of Beijing, concerns from U.S. businesses that maybe they don't have a safe way of doing business there. Do any of these measures make you feel like, OK, this is a safer place for either American investors or American businesses these days?
No, not at all. I mean, they don't have anything to do with rule of law or whether China's going to crack down on certain companies, Western or domestic. What this is an opportunistic play in the stock market. The government said it's going to backstop you, so you jump in and you ride as long as you can. But if you're in China and you're trying to actually determine whether your future looks better now than it did, say, a month ago, and you're a household, you're trying to figure out, how does this advantage me in the long term? Is this going to be a one-off handout, or is this going to be something that restructures the economy in a way that's beneficial to me? If you're a corporate, we've seen bottom barrel borrowing for 3 or 4 years now. Is this going to spur borrowing beyond a month or two, or even that? Or is it going to simply, are firms going to look at lower rates and say, no, thank you, the way they've done it for the last 4 years? So the question is this a structural pivot in the minds of people in China so that they'll change their behavior going forward? And I think we haven't seen enough from the stimulus package to convince us that that's going to happen.
What would change your mind on that front? What would make you think this is more long-lasting on the ground there?
Well, I think it would have to be a lot more demand-side stimulus, but not one-offs. It has to be more about restructuring economies so it's no longer disincentivizing savers and households and private firms in order to advantage state firms. You don't want to reduce the savings rate so that you could take that credit and plow it into manufacturers, for instance. So what you want to see is an economy that looks like it works for you if you're a Chinese family. And what's happening, and has always happened as part of the financial system, is suppression of households in order to boost the state. And I think they need to reverse that in order to see a sentiment shift.
What's your expectation for growth there for the rest of this year and for next year?
Well, look, they've done enough so that they're going to claim to at least be near the 5% GDP growth target. A lot of what's happening right now, as it's been suggested on the consumption side, will be pulling forward growth. If you're trading in goods now, you're not going to need them in the medium term, so that's medium term negative. But it's enough to pull forward growth in the coming months. Retail sales should improve, property should stabilize. So it will be a boost in the short term to growth. The question is, creating all these saying they're going to create all these swap facilities for stocks, and they're going to be plowing all this money into things that they don't really care about, like asset markets. How long will this last? How much will the boost be? And once you get to that, point in the stock market, so you get to, a certain number. What happens then? Does everyone sell into this? That's what's happened every other stock market rally in the last 15 years. So it's a real big question beyond the next several months. What's going to happen? The growth will go up a little bit, but again, we may be back to the drawing board if they don't do a lot more.
Leland, do you ever go to China, or is this based on things that you're reading? Just what sources are you looking at?
Well, I mean, we have an active survey that tracks China for thousands of firms every single month. So it's firms on the ground reporting their conditions. I do go to China. It's a different environment there now than it was 5-10 years ago. But I think that the core here is that we're trying to get responses from around the country. The problem for people jumping into China is they go to Beijing, they go to Shanghai, they go to one other choice city, and they bring back their impressions. And what China Beige Book is trying to do is do away with that, to survey the entire economy, the entire country, all the major sectors, all the major regions, and see what the many China stories are telling us, rather than just impressions of a trip or two or three.
What is different now versus 5 or 10 years ago? Because I haven't been there in a while myself.
Well, the biggest thing is about sentiment, and I think that's why they did this package right now. The idea for a while was that China was changing and China was growing, but that there was still opportunity. And I think what happened over the last 4 or 5 years is that there's this belief that the government is cracking down, that it's not focused on supporting growth, it's not supporting households and consumers, and so you look at borrowing, you look at investing, you look at hiring, and all those metrics underneath the hood are looking really bad and have looked really bad, particularly borrowing, for years and years now. So the idea is, how can you kick China sentiment back up a couple notches and make sure that this doom confidence loop doesn't hit? People have been depressed about consumption, pressed about property. How do you make sure that these things don't feed off each other to create some sort of broader contagion?